Okay, Lynn, with all the craziness happening in the world, is it the best time now to change superannuation investments to very low risk and cash instead of the high risk categories? Any thoughts, Martin?
My thought, first of all, was which year was this written? Because there's lots of craziness that's happened over the last 5, 10, 20 years and 50 years.
I think I commented in the group that I think craziness is baked into life.
That is consistency. And unfortunately, surprise, surprise, there's going to be more craziness in the future.
Yeah.
So should we be making short-term decisions with our long-term money? The answer is no.
Yeah.
It was a case of, I've got some cash in the bank and I want to buy a new car in 3 months' time. Should I leave it in cash? Yes, probably. But if I'm retired and I'm 70 and my retirement nest egg needs to last me for the next 10, 15, 20, 25 years, what's happening next week or the month after shouldn't be a concern. I mean, you can be conscious of it, but it doesn't mean we need to make a change. As long as you've set up your income stream with the long term in mind. And I'd be concerned around shifting something now to then go, well, I'll want to wait for it to drop and buy back in. That's unlikely to be timed very well.
And what I would probably draw for Lynn, if this is kind of Lynn's age now, down here at this axis, and then in the future could be age 60, 65, 70, and I've just put them as flashpoints of, it could even be 67's a flashpoint, but I'll keep it 60, 65 and 70. And we'll assume Lynn is 50 or less. She doesn't, certainly from that little blurry image, doesn't look like she's much more than 50s.
All women look 21 years old to me.
You're right.
Yeah,
you are.
It's hard.
Yeah.
Yes.
So given Lynn is still in her early 40s, what we need to understand is if I draw this line here as a volatility in a portfolio, over time it increases. That's really bad. I shouldn't use that color. I'll just do that again. If it goes like that, that's just a balanced option. And if you zoom into right now, and if we said it was just sawtooth, like really crazy right now, we don't want to react based on here when we don't need the money for at least 7 years anyway.
Yeah.
So we always have to, if in doubt, zoom out. I'm going to get my team because I want to do some like stickers.
Bumper
and,
sticker,
and a t-shirt and hat. Chill out, zoom out.
Yeah.
Because that's what we need to do. Often when we hear with everything happening in the world, if you're asking the question, it's generally too late to act if you are one to try and time investing.
Yeah.
That's just a rule of thumb. So, but what we can do, Martin, as you'll likely agree, when it comes to our risk profile, if Lynn was a high-risk investor, over time her portfolio might look like a really jagged sawtooth, right? Which Lynn might not be comfortable with that. But how can we get an investment that maybe is less volatile so it just smooths the ride out a little bit more?
There's a few different things we can use. You need to make sure the risk you're taking fits with your sleep at night factor. Because history shows the more risk you take, the more reward you get in the long term, but not in the short term. Yeah. And that's the zooming out thing. So whatever your investments are set up at 50, at 55, 60 or 65, they've got to be set up with the next 20 years in mind. Yeah. But what we like, and we've done an episode about it, is considering some buckets, ensuring that, okay, what is the money I need? Again, in this case, if Lynn's in her 50s, it is a set and forget. Well, I can't touch it till I'm 60 plus anyway. I've just got to let it ride. But if it's a case of, okay, I'm living off that money now and I'm worried about if it goes down next month by 5%, is that going to ruin my whole retirement? Yeah. We can and should start to segment some of our super.
And often with this question, people are thinking short-term tactics where we need to just kick back to our long-term strategy. So we're not making a short-term market decision based on a Trump truth/tweet today.
Yes.
We're going, no, over the next 10 years, what do we want to do? We understand that, markets move like the ocean, all that stuff, and we just have to zoom out, chill out.
Yeah.
But yeah, good question, Lynn.